This is the preview for the Fed decision for July 27th. That's today. Let's start with the obvious. No changes expected. Rates are expected to stay unchanged at the range between 0.25 to 0.50. Basically, it's a story of the US economy versus global worries. Or if you wish, is the Fed really data dependent, or do they have many, many other things in mind? If you look at recent data from the United States, it looks good, not perfect. There are some disappointments, but housing sector, all the figures have been positive. New home sales, existing home sales, building approvals, everything has been positive. There's a good correlation between housing and the rest of the economy. Retail sales. The United States economy is all about consumption. And retail sales have been consistently strong in the past few months. That's good news, okay? Jobless claims have been down. After talking about jobs, the recent NFP report showed a bounce. Sure, this can also be a one-off, but at least the report for June showed that the previous disappointing report from May was a one-off, and we can be a bit optimistic. So if the Fed is data dependent, it should maybe raise rates now, or at least tell us that if things continue in the same direction, they will raise rates in September, okay? That's the data dependent, that's the local economy. But they have other considerations. One of them is the US elections. Raising rates now, and well, not now, not today. Raising rates in September, 2 months before the election, 6 weeks before the elections, doesn't look good, could trigger a lot of criticism, okay, especially from the Republican side, but they could also blame, the Democrats can blame them for hurting the economy and hurting their chances of basically being reelected. So the Fed will likely not intervene, okay? So that's another consideration. Another consideration not to do anything is, of course, Brexit. Lots of uncertainty. The signs that we do have from Brexit show, well, chance of a recession in the UK could impact Europe, and the global economy has already been fragile. Of course, worries about China are always there. So I believe my assessment is that there will be some acknowledgement of the improving economy, but no smoking gun, no hint of rate hike in September. And my assessment at the moment is that we'll have a rate hike in December after the US elections, assuming that Brexit is not that terrible, and assuming that the US economy continues at its current pace, okay? Things to watch out for the statement. I'll just mention once again, well, I didn't mention this, there's only a statement, no rate hike expected, no new forecasts, no press conference by Janet Yellen. Something again to watch out for is our live coverage with Valeria Bednarik, Mauricio Carrillo, and myself. Anyway, regarding specifically the data, the Fed has two mandates, inflation, very, very steady, not rising, but not falling. Wages in the last report have been stable. I mean, ticked up from 2.5 to 2.6% year over year. That's also an inflation measure that's okay, that's steady. I mean, positively steady, not boring. The bounce in jobs, the Fed could be less worried than it was in June, okay? Perhaps they could also be cautious, but they should be less worried, okay? As again, no hint for a rate hike in September. They might, there is this annual meeting in Jackson Hole, Wyoming. Looks like a very beautiful place in the middle of the United States. They have the Kansas City Symposium there. In the past, Ben Bernanke used this meeting to hint about policy moves. So perhaps it happens at the end of August. So Janet Yellen could use this to hint about a move in September. I am very skeptical. Why? Not because the US economy doesn't look good, but because the Fed is dovish. They always are on the side of caution. So to conclude, I do not expect any move. Sorry, I do not expect a move in the rates today. I expect the Fed to be dovish. They could acknowledge the improvement, but all in all, they will try not to rock the boat. So I believe the current trend is a slightly stronger US dollar. You could see a bit more of that, but not too much. If they do hint about rate hike in September, of course, the dollar is going to shoot higher. If they continue painting a gloomy and cautious picture like they did in June, the dollar will fall. The bias is a stronger dollar, but the Fed is dovish. All in all, I think things will be balanced. Okay. Comments, questions here.